Hello again, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back again today with our weekly wrap-up. Graham, what do you have for us today?
Yeah, Stacy, a lot. I'm going to pack a lot into the short call that we have with y'all, but I think we're looking at strong retail sales. We had confirmation of that. Year over year up about 15%. So that's good. That's strength of the consumer buying the goods. So we continually want to see that. I think expectation of market volatility is creeping into the conversations. And I think it should be, right? I think we've had a market that's done extremely well. And I think it's okay to expect some volatility in this market. You know, if we look, the 10-year returns for the S&P have been negative only 6% of the time since 1929. And if we look since 1920, the S&P has had a 5% correction 3 times a year, a 10% correction every 16 months, and a 20% pullback every 7 years. So I think the moral of that story is expect some volatility. Right. Expect a 5, 10, maybe a 20% correction. But I think there's some real still positives out there that we need to be mindful of among some negatives that I'll mention. You know, we still have really strong pent-up demand, hence the strong retail sales. I think you're looking at the savings rate for consumers is about 10%, some of the highest levels that we've ever seen. Record low interest rates still. Corporate earnings still look strong. And I think the fiscal funding, meaning money that's still hitting the system, like the child's tax credit, maybe infrastructure bill, if that's 3.5 or whatever it ends up being, that's still money that's going to hit corporations in the consumer's pocketbook where they can be spent and continue to feed the economy. Some negatives, you know, certainly valuations. I think certain sectors, you know, obviously they're overvalued. Maybe the market arguably is not inexpensive. But if we look at year over year comparisons, I also do think that that could be a challenge. We know it's going to be hard to beat some of those earnings that came out, you know, in 2020 and 2021. But it's one thing to expect it, it's another thing to realize it. So I think the year over year comparisons could be a challenge for the market. And then I think, you know, the pace of interest rates, as we start to see interest rates increase, it might be the pace of them, not the fact that they're increasing. That could cause more stress or strain in the market. And I think the tax proposal. You know, I think when we're looking at the tax proposal that's being brought out, we're looking at the corporate rate going up to about 26.5%, or at least being proposed, right?
Yeah.
We're looking at the capital gains rate going from 20 up to 25%. The tax rate going up to as high, there's a couple different points here, about 37.6%. And I think a couple other loopholes or benefits to what they would feel would be the wealthy, they want to try to pull back on. Right. And one of them is what's called a backdoor Roth, and any of our viewers can reach out. I'm happy to give more attention to that. Also, what we're seeing is maybe a reversal of what's called the step up. And again, reach out if you got any questions on that. So I don't think any one of those last items I mentioned is going to be something that derails the market, but it might be the fact of just change causes change and angst, and then you start to see some pullback in the markets. You know?
Absolutely. Yes, yeah. It makes sense. Well, thank you, Graham. And like Graham mentioned, if any of you have anything that you would like to talk with Graham or our team about with what he spoke about or any other topic, please feel free to do so. Also, check out our website. We have new content on there regularly, and we have our monthly Lunch and Learn coming up next week, which we would love to have you join us on that. And finally, we have our Retirement Planning Today course that's coming up in October. And we do have more information on that on our website, and we would be happy to see you in class. So with all of that in mind, have a great weekend, and we'll see you next week.
Have a great weekend.